Hi, welcome to the Market Alert for Wednesday, 6th of July 2022. So crude crashed yesterday, yield curve inverts, bonds and the dollar surge. Interesting that crude crashed. We'll look at that when we get to the actual chart. Broad risk off mover sent dollar index to fresh year-to-date peak. The thin session ahead of US market open. That was the news item before the market open. They tend to release a pre-market news item on zero hedge. The dollar moving higher, the ruble getting crushed, and I wondered if that's what was behind yesterday. But then Europe's got all sorts of credit problems. As I've said before, they can't even raise rates 0.25%, despite the fact that inflation is running away in Europe. As it says here, Europe staring into the abyss, credit protection exploding. And this was an interesting one as well. I haven't actually read the detail, but I hope and pray this doesn't come to fruition. Norwegian strikes could sever nat gas supplies to UK. In a worst case scenario, deliveries to the UK could stop totally. Let's hope that's not the case. Economic news today, well, we've got Jolt's openings. That's out at 3 p.m. And then 7 p.m. we got the FOMC meeting minutes. There's no rates on this one. It's just a review of the minutes. Gold-silver ratio continues to move to the upside, 92. As I've said before, we've been as high as 120 plus in the past there. The high of this bar is 126. Got a way to go yet. And I wouldn't be at all surprised if we don't get at least three quarters. There's certainly back to 100 in the next few days as well. So let's start off and have a look at the carnage from yesterday. And starting off with the Dow, well, yesterday we saw the market moving lower but managing to recover. I don't know whether there was some plunge protection team assistance here, but failing to close back above the 5-bar moving average at the close of trade last night and down on the overnight. Let's look at this in more detail from yesterday, and you can see that we were up in the cash German futures, and then once the UK and Europe opened, the Dow moving sharply lower by some 850 points there until we got a bit of support coming in at this level here. You can see we were oversold, and then the volume starting to tail off. Then we see the buying coming in and the market managing to recover back to the DP level there, which was a hell of a recovery given the backdrop of everything else that was happening yesterday. Overnight, the market is sitting on the DP and the 200 MA there at the moment, so it'll be interesting to see if we can get a bit of a move off this back up to yesterday's high, which is also the, let's have a think here, Monday high as well. So we'll see if the market can actually recover a little bit from yesterday, as you see in the daily chart there, but quite a good recovery given everything else was falling apart yesterday for the Dow. And in the German DAX, you can see that yesterday we took out the 12616 level and still showing weakness overnight. We need to look at this in a bit more detail by going to the monthly chart, and you can see that we had a low over here of 12,434, and yesterday we went through it to 12,384, the market recovering a bit. And because this is a monthly chart, it looks slightly odd when you look at the smaller time frames like the 30 minute, and there is your 12,384. This orange line is the 434, and you can see how the market was brought back once prices traded down to this level from the monthly chart yesterday. That's the low that we see before, or that was made during the initial Russian-Ukraine war there. So the key number, I suppose, is the 384 and also the 434. So watch these in the smaller time frames, like the 5 minute on the overnight. That's the day activity for the DAX in the 5 minute chart, but overnight you'll see that we're at the 12,550 level and also the close. So like I say, just watch those lows for yesterday, which is down there. That's the one you want to watch for in the smaller time frame. The results so far this week, let me just go back here, and you'll see that Monday I traded, ended up with the day with a small loss, and then yesterday made it all back, and then some as well. Not the best of days, but I was sidetracked with other events and other issues. But all in all, it's still looking good overall. As you can see there, from the 19th of January, we're still moving to the upside. So no complaints. Hopefully today be a better day, and see what happens when we kick off at 7 a.m. In the S&P, very similar to the Dow yesterday, the market trading back to 62.78, where it's found support and then moved high, and you'll see that in the 30-minute chart as well. Massive volume as the Dow and the S&P kicked off, finding support in this area here at 3,750, and then the market again, I don't know whether it was PPT assisted, but the market moving back to the upside. It's also back above the DP as well, and above the 200 MA, unlike the DAX, which is showing a lot of weakness. The UK also saw a big sell-off yesterday, trading back to 89% of the recent move. And you can see there 7,032. It's holding up really well compared to the other markets. And as you can see, the drop in the 30-minute chart there, a couple of 100 points or more. Let's just have a look. 1 to 250 points. Trading back up to the DP, unlike the Dow and the S&P, has failed to close above this, hit the 50 EMA, and is moving back at the moment. Watch the low as well of this one, 7,010. Obviously trying to keep the market above that 7,000 level. In the currencies, big day yesterday. The yen hammered to the downside, still on the overnight, as well as the dollar is gaining some strength. Watch the 160 level in the daily chart, 30-minute chart. You can see yesterday a lot of resistance here, physical resistance to the previous day's high, and then the market just selling off as the dollar moved higher. Same for the pound as well, absolutely crushed yesterday, down, making a new low, as you'll see there. Just move that out of the way so we can see 118.982. I was just thinking then, let's just have a look at the monthly chart. Yes, we're heading back down, aren't we, to that 117 level, and then the low of the COVID crisis is down at 114. That's why I was pausing. Then I was just thinking about 114 and where was it, and that's where it is. Yeah, so an interesting level down here if the market continues to put pressure on the downside there. We'll have a look at the dollar now, and also the metals. Well, the sell-off in the silver market continues, and as you know from the alert last week, I said I was going to buy in the monthly chart at 19.18 and decided against it, and I'll tell you for why. Because they're determined to get the dollar to the upside now, and yesterday there was a massive spike to the upside. 120 is the multi-year high on this one, where it could go to. We've got more rate hikes coming, and that being the case, I think we're heading down to around $14, between $16 and $14 now for silver. They're just going to crush it as they want to. I mean, it's going to be a bargain of the century if they do manage to achieve this. And given the fact that we've been now for this is the 4th month straight where they've absolutely hammered the silver price, there's no doubts about why we couldn't actually get down to these levels. It's a paper market, it's a derivative, they can do whatever they want, and I suspect they're going to do it. We've got probably another 2 or 3 rate hikes until we get around to November, and then they'll probably stop. So until that point, I'm afraid it's moving prices to the downside. It will be an absolute bargain. I mean, everything else is going up. I mean, yesterday there was an article about a kilo of Lurpak butter is now £9. Well, but before long you'll be able to get an ounce of silver for this, the way it's going on. All-time high $50, 1980. Gold was $800. It's now, been crushed, but it's still more than doubled in value. Silver is 60% cheaper now than it was in 1980. Makes no sense, does it? Unless you actually look at it in a bigger picture of what's really going on. Yesterday you can see London fix just absolutely crushed, and now they're just trying to do exactly the same there with the price. They've just shaken it below $19, as you can see. They just had a hammer to the downside. They're trying to bring it back, but it's going to go a lot lower because they're going to continue to increase rates. Gold hammered as well, as you can see in the 30-minute chart there. Massive drop in the price of gold yesterday. What have we got? 100, 200, 300, $250, $300 drop yesterday, all the way down to where are we currently trading? Let's just have a look. We've just come down to this low here, 764. So big drop yesterday in the price of silver. Gold in the gold market, and all because of the dollar. Like I say, 120 is the high. It's only at 106. That's going to have a devastating impact on the price of gold and silver, and crude as well. This is a brilliant move yesterday, and I'll tell you for why. Because if you remember yesterday's market alert, JP Morgan were talking about crude going to $380. Guess what? People jump in thinking that JP Morgan are the gods of forecasting, and then they just absolutely crush them by bringing the market down. The $100 per barrel level is the important level, but don't get too excited. You won't see the prices coming down at the pumps anytime soon. They'll blame the wholesale market shortages for this, and they'll continue to keep the prices up at the current levels that they are at the moment. So there you go. That's it for this one. Let's see what they do today with the metals and the dollars. I suspect they'll keep the dollar moving to the upside as much as they can. And we'll see what happens by the end of the day. But watch that level in the DAX, the 434 and the 386 level. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.